The silver market is getting hot and ugly, so those of you who own actual silver should be happy. Apparently, the silver market collapsed over the weekend, and India ran out of silver. All right, let's dive in. Visit SD Bullion's online store to purchase precious metals. Visit sdbullion.com/new to purchase gold or silver instantly. It means the world to me that you tuned in. Thank you from the bottom of my heart. At around $50 per ounce, silver's price has remained relatively unchanged. The current price is $5,228. Looking at the silver price for the whole year reveals an increase of almost $23. Although this is a tremendous increase for the year, silver has climbed about $8 in the past 30 days alone. The silver market is booming, yet it still lags behind the gold market. Gold has surpassed $43.50 for the first time in history, and its price increase of almost $100 today has sent it to a new all-time high. Of course, many of you already know that silver follows gold. Today, gold is unquestionably at the top. But why is the silver market collapsing? Why is there claimed panic in London? And why is silver sold out in India? London is where I would like to begin. You may already be aware that the London Bullion Market Association, LBMA, has been experiencing a shortage of free float silver. In fact, in order to meet their urgent needs, they have resorted to flying silver over from the United States, instead of sending it by boat. According to this story from the Scottsdale Mint, the silver market in London is experiencing unprecedented chaos. Benchmark prices have risen beyond $50 per ounce due to a strong short squeeze, which is only the second occasion this has happened in the metal's history. Liquidity in London is almost non-existent, says Bloomberg. Metal is hard to come by, and traders who are shorting the physical market are paying exorbitant interest rates on loans just to keep their bets open. At this time, we do not have any liquidity accessible. This silver market is experiencing something never seen before. There was almost 850 million ounces of silver in circulation in 2019, according to free float, or what is tradable, and this graph shows that quantity decreasing in London's vaults. Currently, there are fewer than 200 million ounces left. Consequently, the silver market is under tremendous pressure, and the cost of borrowing or leasing silver has soared to unprecedented levels. How can we then resolve this issue? Well, in 1980, authorities limited new positions on US exchanges to alleviate the Hunt brothers' crush. But at the present time, there is no such mechanism. The relief we need is an increase in the actual supply, which can be achieved by ETF liquidations or international shipments. As a costly but essential measure to restore equilibrium to a market where paper prices have once again met the boundaries of physical reality, some merchants are already transporting silver by air. This concludes our brief overview of current events in London. Nevertheless, what is happening in India? How has the silver market collapsed? The unanticipated scarcity is discussed in another piece published by the Scottsdale Mint. I appreciate the use of quote marks because it's not too surprising. You might be surprised to learn that many Indians will be stocking up on precious metals like gold and silver in honor of the Hindu festival Diwali, which is currently underway. The silver demand during India's festival season was higher than expected, despite months of preparation by Vipin Raina. This week began with a first. Pump India, the biggest precious metals refinery in the nation, ran out of silver. Silver is literally non-existent, according to Raina, which is why most people dealing in silver and silver coins are out of stock. In my 27 years in the industry, I have never witnessed a market as wild as this one, when prices are so high. Wow, that's outstanding. In the last days of the week, shortages extended much beyond India. hedge funds and international investors jumped on the buying bandwagon, either to ride out the market's wave or to hedge against a falling dollar. Soon enough, London, the global center for silver pricing, ran out of metal. This story brings to light an intriguing fact. JP Morgan Chase, India's leading bullion supplier, informed at least one client that more silver deliveries would not be possible until November. Impressive work, JP Morgan Chase. Hundreds of millions of ounces of silver. I thought you had it all sorted. They could have gone anywhere, but I don't know. Today, Eric Young posted this intriguing text thread on X. Here we have Bob the Bullionaire. That name is really sweet. Behold this. After LBMA broke on or around October 3rd, my current theory regarding Comex is that they are now being used as the vault of last resort. I compared the timing of the LBMA free float going code red and the vault of last resort losing 9.4% of its free float in 10 days to the Comex data, as well as to the timing given by Jensen and others. We should expect the Comex silver free float to reach zero shortly as well. Also, December deliveries are on the horizon, and my model predicts an incredible 110 million ounces. Plus, a significant portion of those ounces will no longer be available for free float. Impressive, right? Now try saying that quickly. However, this is somewhat bizarre. Both the Comex and LBMA are seeing a depletion of silver reserves. A video clip that was posted in India by CNBC is this. A gold and silver dealer's long queue is depicted. I can't even begin to fathom the anticipation of having to wait in line for anything like this long. The current situation in India, where gold and silver are in short supply, suggests that a similar situation could arise in the United States in the future. I get that they were on vacation, but consider the need for precious metals. All throughout the globe, we can feel the need. According to Morgan Stanley and others, you should now allocate 20% of your investment portfolio to gold, so it's clear that demand for precious metals is on the rise. It seems like a lot of people are finally starting to get it. Silver will become unattainable. Consequently, you should put your money into gold or silver right now while you can. Although gold and silver are already at record highs, I believe they have a long way to go before they reach their full potential. Using the 1980 CPI measures, released by Shadow Stats, we can observe that gold previously reached an all-time high of $11,500 when we examine the M2 inflation-adjusted all-time highs for both silver and gold. That was in 1980, when inflation was taken into account. An ounce of silver reached a high of $668. The current prices of these precious metals are far lower than their all-time highs. This was posted earlier today on X by Gold Silver HQ and pertains to gold. Presently, 6% of the world's investable assets are gold. It stood at 22% in 1980. The current economic reset is unlike anything that has happened since the 1980s, and there is still plenty of space for improvement. Therefore, it is possible that gold and silver will rise beyond these earlier estimates, and the exact level to which they may rise is anyone's guess. In my opinion, the most important thing is to think about getting some gold or silver if you don't already. Compared to this time last year, gold is up around $1,700, while silver is now over $50 per ounce. On Friday, we did experience that decline. Now could be a great time to buy silver, as its price reached $54.24. The fact that silver is still trading above $50 per ounce suggests to me that it is establishing a floor here, and I am unsure of its potential future trajectory, although it is beginning to rebound today from that dip last week. Rumor has said that this year's price would reach $60 to $70 per ounce. I'm interested to see where you see silver going, so I'll be keeping a close check on it. In the space provided, please tell me. I really appreciate you taking the time to watch, and I'll see you in my future video. Released Silver Dragons.